Have you ever wondered how much money can actually be made through real estate or stocks? Let me walk you through my journey, one that may change how you think about investments. A few weeks ago, Shelby Church shared a fascinating video comparing 5 years of investing in stocks versus real estate. Inspired by her analysis, I decided to dive into my own portfolio and assess how much I've made in each category, how they compare, and what this means for the average person. Spoiler alert, the results might surprise you. My hope is to provide insights that save people from making costly mistakes. Now, before diving in, if you enjoy content like this, feel free to support by liking or subscribing. I'll also link Shelby's video in the description for those interested. Let's start with real estate. Success in this sector largely depends on timing and location. My first purchase was a bank-owned foreclosure in 2012 for $59,500 located in San Bernardino County. I paid in cash using savings from my real estate agent job. After spending $112,000 on renovations, the property is now valued at $400,000 and brings in $1,500 in monthly rental income. This sparked a pattern. Over the years, I bought, renovated, and rented out additional properties. In 2016, I purchased a West Los Angeles property for $780,000 with a $150,000 down payment, securing a 3.375% fixed-rate mortgage. After $60,000 in renovations, I saw a 280% return on my investment plus $150,000 in rental income over 5 years. In 2017, I ventured into duplexes, buying one in Mid-City Los Angeles for $585,000. I spent $220,000 on renovations and later refinanced, pulling out my initial investment while locking in a 3.75% mortgage rate. That property is now worth $1.2 million and has earned me $120,000 in rental income. The cycle continued, with each property yielding significant returns. In total, I invested $643,000 of my own money over 10 years, with an overall value increase of $1,843,000, a 281% return, not including rental income. But let's narrow the focus. How did these investments perform over the last 5 years? Interestingly, the appreciation wasn't as high as you might think. For example, a property worth $300,000 pre-COVID is now valued at $400,000, a 33% increase. Another went from $1.2 million to $1.4 million, a 16% increase. 2 duplexes saw 20% appreciation over 5 years. While these returns are decent, the current market presents challenges. Rising home insurance rates, up 35 to 40%, property taxes, up 15%, and skyrocketing labor and material costs, up 50 to 100%, mean that if I bought these properties today, they might not be profitable. For instance, a property valued at $380,000 now would cost $2,900 per month in expenses while only renting for $1,950 per month, a clear loss. This brings us to stocks. Had I invested all my money in an index fund instead, would the returns have been better? Studies show that lump sum investing outperforms dollar cost, averaging 68% of the time and holding cash 69% of the time. They provide tools to build diversified investment portfolios, making it easier for individuals to get started. While real estate can be a great investment, it's not always the best option in today's market. Equipping yourself with the right knowledge is key to making informed financial decisions. Did you know that buying a house in 2025 could be one of the worst financial decisions you make? Yeah, I said it. While real estate has always been seen as the ultimate investment, times have changed. If you're serious about building wealth, it's time to rethink stocks. Today we're diving deep into why stocks might be the better investment, how they work, and how you can make informed decisions to grow your money. Stay with me, because by the end of this video, you might just change your entire investment strategy. Part 1. Why real estate is overrated in 2025. Let's start with real estate. It's always been pitched as a safe investment. Buy a home, let it appreciate, and boom, you're set for life, right? Well, not exactly. The hidden costs of home ownership. Owning a house is expensive. You're not just paying for the home itself, you're paying for mortgage interest, which is skyrocketing in 2025, property taxes, maintenance and repairs. Ever had to replace a roof? Ouch. Insurance HOA fees for those in gated communities. And let's not forget, your home is not liquid. You can't just sell it overnight if you need cash. Plus, the market isn't guaranteed to go up. 2 stocks are more accessible. With stocks, you don't need $50,000 for a down payment. You can start investing with as little as $100. And instead of waiting years for your home to appreciate, stocks can grow much faster, especially if you invest wisely. Part 2. Why stocks are the smart investment choice. All right, let's talk about the real wealth-building machine, stocks. Stocks grow faster than real estate. Historically, the stock market has averaged 10% annual returns, while real estate averages around 3 to 5% after inflation. Lower barriers to entry. You don't need a huge lump sum. You can invest bit by bit. You can earn passive income. With dividends, you get paid just for holding certain stocks. Diversification equals less risk. Unlike real estate, where all your money is in one house, stocks let you spread your money across multiple companies and industries. And the best part, stocks are liquid. If you need money, you can sell your shares instantly. No waiting for a buyer, no paperwork, no banks. Part 3. How to choose the right stocks. Now, you might be thinking, okay, stocks sound great, but how do I pick the right ones? Here's a simple 3-step strategy for beginners. 1. Invest in index funds, the easy way if you don't want to pick individual stocks. Go with index funds like the S&P 500V, OOSPY. These track the top 500 companies in the U.S. and have consistently outperformed real estate over decades. 2. Look for strong, profitable companies. Want to invest in individual stocks? Pick companies that are profitable, growing, and have a strong market position, like Apple, Microsoft, or Google. 3. Play the long game. The stock market might go up and down, but over 10, 20, or 30 years, it always grows. The key is to stay invested and let compound interest work its magic. Part 4. Who should still consider real estate? Now, am I saying never buy a house? Not necessarily. Buying a home for personal reasons, like stability or raising a family, makes sense. Real estate also works if you're buying for rental income and the numbers make sense. You can afford the costs without being house poor. You have a long-term strategy and won't rely on appreciation alone. But if your main goal is to build wealth quickly and efficiently, stocks are the way to go. Conclusion: make smart money moves. So what's the verdict? Stocks versus real estate? In 2025, if you want higher returns, more flexibility, and lower costs, stocks win, hands down. What do you think? Would you still buy a house, or are you leaning towards stocks? Drop a comment below. And hey, if you found this video helpful, hit that like button, subscribe, and turn on notifications so you don't